There are two ways to estimate bad debt expense. It is an estimation process that has a lot of errors. Not much science in there when it comes to predict the future. Normally, companies simply use a historical rate and do some adjustments for current conditions. One way to do it is to do a percentage of sales method, which is what we did in the slide before. If historically 5% of customers do not pay, use 5% this year also. Take the historical figure and apply it today. Use your judgment to do some adjustments. If the economy is worse, then apply a 6% rate rather than the usual historical 5%. For example, Verizon during COVID estimated that each 0.25% increase in bad debts leads to losses of about 100 million. This information is in their report. So for some companies that rely heavily on credit sales, a deterioration of economic conditions is quite bad for the income statement. The same can be said about banks. Banks lend money and expect receivables. When borrowers cannot pay, it leads to losses. The second way for estimating receivables is the balance sheet method. You look at your borrowers. You see who owes you from this year and from the years before. Then you make an evaluation. You add probabilities of non-payment, depending on how far back the customer borrowed. In other words, if someone borrowed from you 3 months ago, perhaps the non-payment rate is 5%. If someone borrowed 1 year ago, the non-payment rate is 15%. And if someone borrowed 2 years ago and is still not paying, maybe the non-payment rate is 75%. So what companies do is use the historic rates. Look at how much of your receivables of last year were not paid, apply the same rate again this year, and do an adjustment if necessary. Remember, the bad debt expense is not a cash item, so needs to be added back to the cash flow statement. I give an old example from Sears, which is a classic. Sears was having a lot of trouble with customers who were buying and not paying. For the year 2002, the provision for uncollectible accounts, which is a different name for bad debt expense, was 2.261 million. This number is added back to the cash flow statement. Remember, it reduced income, but did it reduce cash? It did not reduce cash, so it has to be added back. This is an estimation. It is an estimate that in the future, customers will not pay us 2.26 billion. This estimation is totally under the company's control. They can estimate whatever they want. And the auditors will find it quite hard to argue against them, since it relates to the future. Now imagine a CEO wants a nice bonus. Will they record the high bad debt expense? Likely not. Rather than putting 2.26 billion, they will put 1.8 billion, for example. The income will be higher by about 500 million. Accounting manipulations are everywhere, and often they lead to large increases in income. Let me give some examples from Facebook and from Boeing as to how they treat their receivables. For Facebook, if you read their 10K, it says, we make estimates for the allowance for doubtful accounts based upon our assessment of various factors, including historical experience, the age of the accounts receivable balances, the credit quality of our customers, current economic conditions, and other factors that may affect customers. Exactly as we learned in class. They provision based on historical rates, plus or minus some adjustments. For Boeing, and remember Boeing has institutional clients, large airlines, they write, the adequacy of these allowances is assessed quarterly through consideration of factors such as customer credit ratings, bankruptcy filings, published or estimated credit default rates, age of the receivables, expected loss rates, and collateral exposures. Here, as you see, what is different is that they rely on credit ratings, bankruptcy filings, since a lot of airlines go bankrupt. And also they look at credit default rates with other banks. General Electric is one company that heavily relies on credit in its business processes. As you see, they are quite elaborate. they split their receivables into various sections: aviation, healthcare, renewables, etc. They also put their non-customer related receivables, such as tax receivables expected from the government. In the end, they put at the bottom an allowance for credit losses, which is 1,074 million. So from a total of 16.5 billion of receivables, GE expects that roughly 1 billion will not be paid. So about 6%. That is a high number. No one should be happy that 6% of those who owe you end up not paying. Here is an article on HSBC's provisions during COVID. HSBC, one of the world's largest banks, is in the lending business. It lends out money for interest. If customers stop paying, it is in trouble. For the case of HSBC, they record provisions higher by 111%, a huge number, where the bad debt expense is now more than double of what it used to be. Of course, COVID means that some businesses are hard hit and they cannot pay. But how does HSBC determine the 111% rate? Is there a precise science behind it? Certainly not. No science, some assumptions. You can say it is as much science as you want it to be. But at the end of the day, no one can really predict who pays what in the future. Is this number manipulated? Could be. Everything in accounting is massaged at the end of the day. I do not want to say that all accountants are crooks, only the vast majority. So please, do not stereotype based on accounting.